So this is macro spring and crypto spring. The cycles are actually the same thing. The Bitcoin halving actually just relates to the macro cycle. So now we're in the phase where we need to pay the interest on the debts from the pandemic in 2024, 2025. Those went exponential. And the only way of doing it has been put it on the balance sheet of Federal Reserve. So the conclusion of that is there is only one outcome to everything, which is more cowbell.
In his latest interview, Raoul gives us an early prediction for crypto in 2024 and the significant impact Bitcoin will have on the entire cryptocurrency industry. 2024 is the year of the much-anticipated Bitcoin halving, which historically has seen massive price gains for the 4-year cycle as the leading crypto asset. With the industry seeing droves of institutional investors pouring in, all eyes are on the approval of the spot Bitcoin ETF. The Real Vision founder remains bullish heading into 2024 as the end of the Fed's quantitative tightening cycle comes to a close and crypto summer begins. Raoul discusses his bullish predictions for crypto and the state of the economy and says the biggest 10x crypto price tsunami is almost here in just a matter of months. Let's get right into the latest interview with Raoul. Don't forget to share your thoughts and comments down below. Let's get right into the video.
I think the NASDAQ finishes this year at all-time highs. I think the S&P goes to all-time highs. So Q4 for me is the weaker period. Yep. That's when the recession comes in. So that's when we've already heard today, really, all the Fed were out saying, we've done enough. Bond market's gone too far. The bond market's overpricing this. Things like Janet Yellen saying today, really interesting comment. She said, well, when we think about it, financing the debt is going to be about 1% of GDP for the next 10 years. Well, if the government's 100% of GDP in debt, she's basically saying interest rates have to be 1%, which is part of this everything code thesis I've had. So what I'm seeing is liquidity starting to pick up. I think they will stop quantitative tightening this year. And then it's a bit complicated here, but the Treasury have been issuing new stuff. So that's the TGA bill, but that probably slows down. But the reverse repo, which is the other part of the liquidity stuff, start draining, and that probably pushes liquidity. If they take QT out, it just means liquidity rises. So generally speaking, crypto is the multiplier. So if I look at the NASDAQ's up 38%, Bitcoin's up 70. So if the NASDAQ finishes the year up 48% or something like that, which would be a hell of a year for the NASDAQ, well, Bitcoin should finish up 100% plus. Correct. So this is macro spring and crypto spring. The cycles are actually the same thing. The Bitcoin halving actually just relates to the macro cycle.
Let's talk about that.
Which is all interest rates in 2009 got reset to zero everywhere. It was a debt jubilee. It was a great reset. Nobody understands this because everyone wants their debt jubilee was to forgive all debt. They didn't. They forgave all interest payments. So what happened is every government on earth reset their debts between 3 and 5 years. So we've got this 4-year cycle, which is the Bitcoin halving cycle, which is the economic cycle. They're all the same thing. So now we're in the phase where we need to pay the interest on the debts from the pandemic in 2024, 2025. Those went exponential. And the only way of doing it has been put it on the balance sheet of Federal Reserve. So I went back and I think I was the first person or the only person to show that all balance sheet growth of the Federal Reserve was just the payments of the debts, the interest. So nobody's paying interest, even though interest rates went up. They don't pay them. They pay them for this period. When it comes to actually pay the interest, they stuff it on the central bank balance sheet. So nobody can afford to because the government is 100% of GDP in debt, just over that. And if interest rates are at 5% and economic growth's at 2%, well, there's 3% difference because GDP growth is all of the income for the economy. Well, if that's not enough to pay the interest alone on the government debt, how the hell are you going to pay the private debts, which is 120% of GDP? These are the maths that form part of that everything code thesis. It's like there is no way they can have interest payments here because what's going on today is they have to keep issuing more bonds and more bonds and more bonds.
To pay the interest from
the previous ones. So they can't do it. So the conclusion of that is there is only one outcome to everything, which is more cowbell. They either stop yields rising, like in Japan, it's called yield curve control.
Okay.
And what that is we will pay this price, let's say 5% on bonds, regardless of how many you sell us. And to do that, they print money. Or
It's either more liquidity.
or I think they're trying to overshoot with inflation on the downside, bit of unemployment rising, so then they have the cover
to
cut interest rates
Okay.
and stimulate. Election year, always stimulus. So all roads lead to more cowbell.
Embracing an unyielding enthusiasm for the crypto realm, Raoul confidently predicts that explosive growth is looming on the horizon, as BlackRock and many other crypto giants are doing just that. Powell reassures that a long-expected surge awaits, leading up to the highly anticipated 2024 halving event for Bitcoin.
It's the point being is you debase the currency, all assets rise, because you're optically debasing, which is why the Argentinian stock market goes up in a straight line until you put it in dollar terms and it's actually gone down 90%.
Oh.
That's debasement of currency.
Right.
Venezuelan stock market's the same. All of these, Iranian stock market, they're all the same thing. Why crypto outperforms is really simple. It's got a faster adoption curve. It's a technological adoption story. Everything else is noise. It's technology plus debasement. NASDAQ is the second best performing asset. Why? Technology plus debasement. The S&P basically just about offsets debasement plus dividends. Real estate doesn't offset it. Gold doesn't offset it. So what I started doing was dividing all assets by the Federal Reserve balance sheet as a rough way of looking at it. And you get a really different picture. The S&P has gone sideways forever, which is why people who invest in their 401k, in the S&P, passive index, they never get ahead. So because property goes up and gold goes up and all of the assets go up the same amount. So you're just not making gains. NASDAQ and crypto have been the only two assets that do it. I've written a lot and thought a lot about this. And in fact, I've done a documentary on this. So the millennial cohort in their 30s did what they were told, which was 401ks. That massive cohort has completely disrupted how assets are priced. So index funds go up versus all active investments, which has destroyed the hedge fund industry, the mutual fund industry, everything, because millennials are doing exactly what they're told.
We just put the money in a Vanguard fund.
I mean, they're good. You know, they're like a good badge to do the right thing, and you know that's how the system was generated for them, and so they've done that. But what happened in 2020 was the same that I saw with the Occupy Wall Street movement and the Indignados in Spain when I was there. Is like the pandemic hits, and they're like, we've been doing what we're told, but we can't afford anything. We're in debt, house prices go up, we're not getting any richer, and we're all doing two jobs.
Yeah.
So what the hell are we supposed to do?
Right.
So they took a rational approach. The media, and it really annoys me, the media scoffed at them, as did Wall Street, to say they became gamblers. But they didn't. Well, they did, but what they did was use their discretionary income, because they were doing the 401ks and they were doing all the right things, but they took discretionary income and said, we need something with a high risk reward.
Right.
And it was actually a very valid thing. So the two assets became crypto and technology options. So it's the rise of Robinhood and the rise of Coinbase. And I've gone down the rabbit hole on all of this. So to put it in perspective, online brokerages, so the kind of cognoscenti of people who trade kind of global macro, they use interactive brokers. Interactive brokers have 5 million users, 300,000 monthly actives.
Okay.
It's tiny.
Compare that to?
Compare that to Fidelity, TD Ameritrade, and Schwab. Between 2 and 4 million monthly active users. They've got these vast number of brokerage accounts. That's baby boomers and their kind of mutual fund stuff. Robinhood has 24 million accounts, of which 12 million are active. That's 4 times the size. It's all of the rest of the industry added together. Coinbase is 108 million accounts, of which currently right? We know on-chain activity is super, super low.
Right.
And that's 9 million. So I was at Coinbase yesterday and we were talking this through. I'm like, if we normalize crypto volumes, Coinbase will have 30 to 40 million active accounts.
Powell's analysis brings attention to the liquidity cycle as a valuable indicator for understanding debasement, signifying a shift in the market's direction. He identifies a crucial turning point in June, where his weekly liquidity index hit its lowest mark. This prompted him to focus on purchasing Ethereum. Powell also acknowledges the divergence between liquidity and asset prices, emphasizing that during bull cycles driven by adoption and speculation, cryptocurrencies tend to outperform liquidity measures. Based on his findings, Raoul Pal strongly advocates for the strategic investment in cryptocurrencies, specifically highlighting Bitcoin and Ether as promising assets. He sees them as assets that surpass the performance of traditional financial institutions' balance sheets and provide a means of protection against currency debasement and the inherent flaws of the current financial system. What is your opinion on Raoul Pal's claim that investing in cryptocurrencies like Bitcoin and Ether serves as a smart hedge against currency debasement? Let us know in the comments below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.